Forex News: ECB removes rate cut guidance but euro softer on only baby steps. The European Central Bank announced its decision today to hold monetary policy unchanged at the end of its two-day meeting in Tallinn, Estonia. As expected, the central bank kept its refinancing, marginal lending facility and deposit facility rates unchanged at 0.25 and -0.40 respectively. Asset purchases were also held steady at negation 60 billion a month until the end of the year. However, in another baby step towards eventually starting the process of withdrawing monetary stimulus, the ECB adjusted its announcement statement by removing the rate cut bias from the sentence interest rates to remain at present or lower levels. The ECB had last tweaked its forward guidance in March when it dropped its pledge to use all available instruments within its mandate, and a sign that there was less urgency for further action given the subsiding downside risks to the economy. ECB President Mario Draghi went a step further at his press conference today by saying that the risks to the Eurozone growth outlook are now broadly balanced. The euro spiked upwards twice, first when the decision was announced and again when Draghi started to speak. However, these proved to be a knee-jerk reaction to the slightly modified language by the ECB, and the single currency headed back down again after each attempt. The euro stood around $1.1215 after the press conference ended. It was also weaker against the yen and the pound. Draghi dampened expectations of an end to the ECB's massive stimulus program anytime soon as he highlighted the subdued outlook for Eurozone inflation. The ECB chief said nothing had substantially changed with regards to the outlook for underlying inflation, adding that the path remains low and flat. As had been speculated by leaked reports yesterday, the ECB lowered its inflation forecast for the next 3 years. The bank expects inflation to average 1.5 in 2017, down from its previous forecast of 1.7, and 1.3 and 1.6 in 2018 and 2019 respectively. Projections for core inflation were also lowered and is expected to pick up to just 1.7 by 2019, which is still not quite near enough to the ECB's target of close but below 2. The ECB had more upbeat forecasts however for Eurozone growth. The region's economy is now projected to grow by 1.9 this year, versus the prior estimate of 1.8. It follows an upward revision to first quarter Eurozone GDP growth from 0.5 to 0.6 quarter-on-quarter earlier today. For 2018 and 2019, growth is forecast at 1.8 and 1.7 respectively. Draghi underlined the brighter growth outlook by saying that the current upswing is proving to be stronger than expected. But the improving economic fundamentals have yet to translate to higher price pressures according to Draghi, who said nothing substantial has happened to inflation except the price of oil and the price of food. In a further blow for Euro bulls, Draghi confirmed that the Governing Council had not discussed policy normalization at the June meeting, suggesting such a debate probably won't start before the September meeting. Moreover, despite dropping the guidance for further rate cuts, Draghi said ECB stands ready to lower interest rates if the outlook worsened.